Welcome to this discussion on synthetic ID fraud. I'm Elliot Berman from AML RightSource, and I'm here with my colleagues Amy Petric, Ross Yellon, and Adam Gunselman. Synthetic identity fraud is rising worldwide. 30% of all identified fraud cases in 2025 had a synthetic component. 311% increase in synthetic identity document fraud in North America has been identified compared to 2024. And 95% of synthetic IDs go undetected during onboarding at financial institutions. So it's a serious issue. Today, we'll provide an overview of this form of fraud, including examples of how it is being used and ways to detect and control it. So let's start out by level setting for our audience. Adam, in simple terms, what is synthetic ID fraud?
Yeah, so synthetic ID is just a complex form of financial fraud in which one or more real individuals' information, such as their social security number, phone numbers, addresses, are kind of used together to create a falsified identity, kind of just an amalgamation of all of those data points. So just a new identity altogether.
And it seems that synthetic ID fraud can happen on a variety of platforms, through a variety of channels and products. Amy, can you give us an example of a fraud pattern where synthetic fraud has been used?
Of course. So one of the common areas is with credit cards. So as Adam said, there is some real information being used on these IDs as a way to beat, your first step of verification. So you're using a real TIN for somebody else. So they'll use that person's, information to open up a credit card account. And then you'll see bust out fraud happen where they might make a couple of small transactions, pay that, and then they'll do one big hit to get kind of all of that credit limit, and then your financial institution is stuck on the other end. You're never going to receive payment because that's not a real person. They're just kind of leveraging that stolen TIN to get that person's credit history, get that credit amount, and then they're gonna drain the account.
Adam, have you seen some other ones?
A lot of the spaces have kind of been in the same line of thinking. They're just like credit checking product offerings. In some of the other fintech spaces and everything too, just some of the more unique, product offerings. The same sort of principles apply. Just as Amy said, just having some degree of normal transactions and everything, and then doing some sort of bust out fraud there. Whatever it might be specific to that platform. But it can happen in a variety of spaces for sure. Just a very common one in the checking and credit industry. So
One other area, Elliot, that from a traditional bank space that we've seen a rise is in auto loans. So again, they'll use a synthetic ID to apply for an auto loan, get that auto loan, and then never, because it's all false, kind of a Frankenstein ID of somebody else's address, so a TIN or a made up address, a real TIN. So when the bank goes and runs a credit check on that TIN, it's coming up that this person has good credit, we'll give you this auto loan, and then it's gone to the fraudster, and the bank is left on the hook with never receiving payment for that auto loan. So that's another space where we're seeing this increases in the auto loan space.
Ross, anything else?
Sure. Yeah. From maybe a more global payment processor space, we are seeing increased trends of small businesses or sole proprietors where maybe there's not a large online presence or expectation that there would be substantial information, but using partially a legitimate person's information makes it difficult to identify if this is a legitimate business or not. So we are seeing that kind of balance of institutions determining what we want from a frictionless onboarding and then detecting those bad actors to really sift out some of those more legitimate users from the ultimate fraudsters.
One of the things that we've all seen in the financial services space, whether it's account opening, payment capability, whatever it might be, is um, uh, the need for speed, or at least the desire for speed. I'm not sure it's a need, but it's certainly a very motivational desire, which causes or can cause us to try to speed up a lot of steps in the process. Some of those steps really need to be a little slower so that more in-depth checks can actually happen, particularly at the onboarding stage. And I think that from my reading, Synth ID to a limited extent takes advantage of that increased speed. And so I guess from my seat, that would be another element. Um, uh, we also have talked about some of the places we see it. Ross, what's your experience of clients you've worked with, and what kind of controls they're trying to put in place to mitigate the risk that this presents?
Sure. Yes, definitely. So a lot of clients are really looking at a little bit more of a holistic approach. So often these are caught in a first line user ops situation where that fraudulent detection is observed. However, a lot of teams are looking more at training their entire departments, whether it's relevant to fraud or not, to have a more holistic review. So patterns are shared across team members, being able to look for that recognition and be able to escalate to the appropriate departments to really remove those multiple steps and requirement for multiple touches, where this could be detected in one place and then handled accordingly without multiple touch escalation points.
Adam, other things?
We're seeing a lot of buildup in like the ID verification processes. As you kind of mentioned at the start as well, that things are getting sophisticated that can kind of bypass that as well. So there's just been a lot of resources being put into that to try and catch that up front. In a lot of these instances, there might just be like the photo matches the ID, so that an automated system might think that that's a very valid document and individual. However, when you read it further on, there might be just attributes in that ID that don't necessarily align with that individual, or just what ultimately ends up being the activity. But just a lot of the verification process to try and get ahead of this at the start of it is definitely an area that we're seeing some resources being dumped into more and more.
What I would add to that, Elliot, and one of the points that Ross made was the training. So different lines we're seeing are being trained within this. So for your front line, for example, when you're opening up that credit, one of the items that they're starting to look at is this kind of Synth ID profile that I've seen come up, which is, does this user have like a large amount of unsecured debt, which would require less documentation for like a mortgage. So the other item is, do they have a lot of recent credit inquiries on their account? Are you seeing a mismatch between the person's age? So if a younger person comes in, or, versus the credit history, a 20-year-old shouldn't really have a 30-year credit history when you're running those reports. So those are some of those flags that are coming up in trainings that are trying to help the front line so that you're never even opening that account. The other part is like, how do you then maybe put that into machine learning for some of the places that are doing, to your point of it, the quicker online onboardings of people. So they're starting to build out those Synth ID profiles and red flags that you're gonna see when you do run those. Some pretty easy ones there, like supposed age with credit history is a good one to start looking at.
Other things, other mitigating. I like that one, by the way. I mean, because you really are going back to, okay, if someone looked at my ID, my credit history will, generally is going to match my age, the kinds of accounts that you would find might make sense for, me where they wouldn't make sense for someone who was 20.
Right.
That kind of thing. So I think those are all really good ones. Are there other things that we're seeing folks putting in place?
Yep. So another one that we see that's pretty common is kind of dark web searches and scanning. So tins that will come up if they were being sold on the dark web from a data breach, for instance, if that's matching, that is an indicator, can be an indicator, right? Another area that we're seeing is, I think Ross hit on it earlier, that holistic view. So, you know, are we seeing shared attributes amongst users within your platform? So are these same tins coming up multiple times, or are they using the same address for multiple accounts? Is it the same, payment instrument on multiple accounts, to really start looking at that web approach? Is this a fraud ring? Is this, kind of, those are some indicators as well that something nefarious is going on.
Yeah, and definitely shifting to automation. We're seeing a lot of things go through an automated, verified process, but still seeing a requirement for that manual review where the automation doesn't really identify those trends. So being able to have that second touch of why things are being declined or not passing verification, and then also looking at the number of attempts. If there's multiple attempts not passing verification, what are some of those reasons? And ultimately, maybe putting a limitation on how many attempts could be occurred is another way that you can mitigate bad actors from maybe creating multiple accounts unnecessarily.
Adam, anything to add to this?
In my experience, I've just seen a lot more into the kind of how Amy touched on, like the web aspect and like cluster mapping aspect of these things, via how she had touched on tins, even other attributes that are such as like phone number. Again, we've even seen as sophisticated as like profile photos, like if some same bad actor has used a similar photo across that, just to try and catch, that this, whoever they are, individual out there that's kind of combining all of these data pieces to try and catch that more upfront, for sure.
Yeah. And I think both Ross and Adam touched on this, which was automation is being used a lot for the initial screening, but you still need that human eye, because I think Adam talked about, like, we'll see where people are using AI-generated pictures or things, and the computer is just looking at, does this face match this face? And then you'll see, it'll pass it, and then there'll be another red flag or something that pops up that then would make a human look at this, and then you would see this is an AI generated image, or this is clearly somebody holding up a piece of paper, doing the selfie verification. We've seen people use wigs to try to beat it and things like that. It's pretty interesting that you still do need, so they might get through the initial one, but you need to put other indicators out there, because you're still seeing where people are beating the computer. And it's the human eye that's catching in the end.
There is a real value to human judgment. And while there's many things that computers are doing, clearly, and doing them faster, back to the faster theme, getting that human judgment on the ones that need a second look, I think it feels like we're a long way away, even with all the advances we've seen, from really being able to have the programs and platforms actually exercise judgment. They're doing, very rapid matching and pattern recognition and all those things, searching across the data set for the same address, as you mentioned, or the same tin being, how many different people really have that number? The answer is supposed to be one. That's the theory. But I think, I don't think we should ever underestimate the value of a trained human eye looking at this stuff, whether it's the photos, which is really, interesting, because in some ways you'd think that facial recognition capability would be more sophisticated than the human eye, but in lots of different ways.
Yeah.
Alerts are alerts, and whether it's in the synth ID space or it's the transaction monitoring space or whatever, but the figuring out the why is still something that I think is uniquely in in held by well-trained, experienced people, and that we shouldn't try to cut that layer out or make it too thin. So we've talked about topologies, we've talked about controls. So in addition to that stuff, what are some of the things you're actually seeing on the ground, Ross?
Sure. Yeah, and fraud is it's kind of you shut down one pipeline and another one opens up. So it's always an evolution of when you're mitigating some concern, they're finding other ways to circumvent policies, procedures. So one activity that is kind of continuing to be prevalent is card testing, where accounts are opened up and cards are just processed as quickly as possible in order to understand whether that card is able to be facilitated for other fraudulent purposes. So if there is an account, even whether it's created for the false pretenses of completing this fraud, or an account's taken over to process these cards to see which ones work and can be processed maybe on a different platform, and which ones are declined so they can throw away those card informations and really be able to facilitate fraud elsewhere. So being able to test cards on platforms such as global payment processors is continuing to be a prevalent concern that is still being worked on being addressed.
Adam?
Yeah, in some instances, we'll see a lot of just only online-based transactions as well. Whereas if it's a platform that has needed to ship out a physical card, typically, if that bad actor is not in control, of that address that they happen to use to register, and it just ends up at somebody's house or undeliverable ultimately, we'll see just a lot of only, online-only transactions for them. Additionally, in instances, we'll see a lot of just like cycling of that information as well. Like say how we talked about kind of just like the cluster mapping and, shared attributes between some of these bad actor accounts, where if a piece was in that list, that it might flag that first and everything and kind of block that account, where you can see kind of in a log there, then they'll just cycle through something else that they have on hand until it sticks and actually lets them through into the system. So, in a number of other variety things with how Amy touched on some colorful things, in some of the ID verifications and selfie photos and stuff that the system tries to match there, as well as just falsified documents and things that you might be able to find on the open web in terms of like templates or, this or that to get your fake IDs and everything printed off as well.
The fake ID kit.
Right. Yeah.
Yeah, there's even websites where you can purchase templates for passports, ID documents, and those websites aren't able to be shut down by institutions. So we do still see the prevalent use of fake IDs where we see the same template. We see very similar pictures being used, just different individuals' names, addresses, date of births being used.
Yep.
Yeah. Amy?
I mean, they've touched on a lot of it. It is from traditional bank to fintech. You're seeing very similar situations, right? They're using those real attributes of someone's TIN, relying on someone else's credit report to open up these accounts. On traditional banking, it is primarily like we're seeing the increases in the auto loan space that I've seen, because it is a little bit easier. Mortgage maybe, but there's a lot more that you have to do to get a mortgage. So it's that auto loan credit card because it's a little bit quicker. You just kind of need to do some misrepresentation on your income, your employment, and then have somebody with a decent credit that you test with your new ID that you created using an AI template, like Ross was talking about. That's kind of what we're seeing. One of the ways that it's being caught before the funds kind of go out is taking that risk-based approach looking at some higher risk indicators, and based if a large transaction's about to happen, putting in some additional verification steps before that large transaction goes through. That's another way that we're trying to combat that. Making people jump through a couple more hoops. I know we don't love friction in the fintech space, but we are seeing that save clients instituting that extra step.
One of the reasons that mortgages are harder is the time. First, they take a little longer to get
Yeah.
approved, although that is continuing to shrink. But the time between approval and disbursement, hasn't really shrunk that much over the years. And disbursement of funds in a mortgage context is part of a more complex
Right.
transaction. There's documents to be executed and all that kind of
A
stuff.
lot more that goes into it.
Yeah. So even though they're much larger dollar transactions, taking friction out of the mortgage process has been the holy grail of people for 25 years, and they haven't done much. I mean, took the time from the approval to close time from 48 days to 31 days, but it's, we're still talking days, not seconds, which is
exactly.
So
And
So
definitely
that's
definitely with the increase of virtual account creation, you don't have to be physically in a bank, or being there physically is now becoming less common. So having that virtual account onboarding has definitely increased the prevalence of some of these more advanced techniques of using AI, using technology to commit those illicit activities.
Yeah, it's essentially forced banks and other financial service providers to put their lines of defense further out, if you will. They have to get closer to the creation of the accounts, because that synthetic ID fraud is happening there, as opposed to waiting for the transactions to start to occur. And that's got its own complexity. You've been all sharing a lot of good insights and information about how that's happening. But from a conceptual perspective, financial crime prevention and detection historically has been, if you will, inside the institution. And now we're actually have to move it outside the institution. Whether that institution has physical branches or not, that's not the issue. It's just where in the interaction are things occurring and synthetic IDs happening at initiation.
Yep.
So you guys have been sharing great insights. Any last things you want to share as we come to the end of our time? Okay, I'll share it out. That's okay.
Yeah, no, I think maybe going back to the earlier point is things continue to evolve. The landscapes of what fraud, synthetic ID is becoming more prevalent because it's a vehicle to commit illicit activities. So once we shut down one pathway, new pathways will continue to generate and bud up. So continuing to advance technologies and look for different ways of detection, monitoring, and ongoing policy, procedure, training will continue to allow us to enhance programs.
Exactly. And continue to have sessions like this, right? Where we're sharing what we're all seeing, and what's working, what's not, so that we can continue. I mean, fraudsters are always going to be, sadly, a little bit ahead of us. But as long as we all keep talking about it, we can work together to help combat it, and move forward. But Ross, I think you said it perfectly. Thank you.
Thanks.
Well, I want to thank the three of you. This has been a great session. I'm sure our audience has gotten a lot from it. And I look forward to future conversations about fraud and other related financial crime issues with you.
Thank you, Elliot.
Appreciate it.
Have a good day.